Have you ever seen the market surge right after bad news? Or crash without warning just when the world is celebrating good data? When you're stuck holding a trade, you blame the chart, the news, even your own mindset. But have you ever stopped and asked yourself, is what I believe truly my own belief, or am I just another piece of the crowd being led somewhere I don't see? I used to believe in many things. I believed in charts, in indicators, in signals, but I lost. Not because I was bad, but because I believed in the same direction as thousands of others. And in this market, when your belief mirrors the crowd's, you're walking into a trap you can't even see. I still remember a time when Bitcoin was skyrocketing. Everyone online was shouting to get in before it was too late. Financial news headlines screamed that this was the age of crypto. A friend sent me a photo of a motorbike taxi driver who had sold all his gold to buy BTC. I started to worry. I asked my mentor why he never checked the chart or opened the news. He simply asked, "Is everyone convinced the price will go higher?" I nodded. He stayed silent. The next day, he placed a sell order. The market dropped. The crowd panicked. And he said only one thing: when belief reaches its peak, the powerful have already left the game. I've never forgotten that moment, because for the first time in my life, I realized the market wasn't deceiving me. I was losing because I believed in the same illusion as everyone else. And I was late to the truth. My mentor didn't trade charts. He traded human psychology. He didn't care where price would go. He only observed what the crowd was expecting and how deeply they believed it. Because the market doesn't move on logic. It moves by exploiting false beliefs held by the masses. What I'm about to share next is how my mentor peeled back those beliefs like holding a mirror to the crowd, and why he only placed a trade when the belief had gone too far. But before we get there, remember this: the market doesn't create your pain. It's your false beliefs about the market that leave you empty-handed. What I've just shared with you is only the first step in the journey my mentor mapped out for me. And if you think this is just a perspective or an opinion, you'll miss the entire strategy that helped me survive all these years. Not just in Forex or crypto, but in stocks, bonds, and any financial market where crowd psychology and money flow still rule the game. I'm not showing off. I'm not here to teach you how to trade. I'm just telling you the fragments my mentor passed down to me. Pieces that kept me alive while hundreds and thousands were swept away by greed, panic, and the mistaken belief that this time would be different. If you haven't seen part 1, where I talked about how my mentor analyzed macroeconomics and why he never opened a chart without first knowing where the big money was headed, I recommend going back and watching that first. Because without a macro foundation, everything you believe will only be a reflection of the crowd. And now, we step into part 2, where my mentor begins to reveal one of the most important insights I've ever learned: how he analyzes the crowd's belief to anticipate when the market is about to turn against them. And I know what you might be thinking right now. How serious can this be? Everyone analyzes crowd psychology, right? But my mentor didn't observe the crowd the way most traders do. He didn't measure fear by red candles. He didn't measure greed using RSI. He didn't call it support, resistance, breakout, or retest. He called it organized blindness. There's one thing he said that I've never forgotten. I asked him once, "How do you know when the crowd is wrong?" He didn't answer immediately. He quietly poured tea, and then said, when they begin to defend their belief more than they seek reasons to doubt it, they're no longer analyzing. They're about to pay the price. I've watched that moment repeat across every market. When BTC hit $60,000, people said $1 million was only a matter of time. When US stocks peaked, they claimed the Fed wouldn't dare raise rates aggressively. When gold surged, they said crises create once-in-a-lifetime opportunities. When gold dropped, they called it a technical correction. I used to be one of them. Maybe you are now. Or maybe you've been there. But my mentor never told me where price would go. He only taught me to observe belief, not signals, not patterns, not news. Just what the crowd believes and how deeply they believe it. Because he believed one thing, and now so do I. The market doesn't operate based on truth. It operates on the crowd's belief in what they think is true. And next, I'm going to tell you a story. If you've ever lost money because you trusted an analysis, a signal group, or a pattern, this might be the moment that makes you pause and reflect. A story about the one time my mentor placed the biggest trade of his life because he saw something no one else did. And if you stay with me until the very end, I'll tell you the words he said to me after that winning trade. Words that changed how I see the market forever. He said them slowly and clearly. And from that moment on, I no longer saw trading as a place to win. I saw it as a place to outlive the crowd. I remember it clearly. The market was roaring after a wave of unexpected optimism. People were calling it the final chance to catch the big move. Trading groups exploded with excitement. Everyone was searching for a reason to FOMO in, not realizing they were becoming liquidity. I brought the chart to my mentor, a perfect setup. Big news. I said, I really think this time it will work. He didn't check the chart. He didn't ask what the news was. He just asked, how many people believe the same as you? I hesitated, almost everyone. He smiled gently and pushed a piece of paper toward me. On it, he had written one line. The crowd isn't wrong because it's big. It's wrong because it stops asking questions. That day, he placed a silent trade. No announcement, not even to me. And over the next 3 days, the market reversed. Price plunged, the cheerleaders vanished. And he won big. Not because he was better, but because he had stayed quiet long enough, watched deeply enough, and stayed cold enough to act when everyone else was thrilled. I asked him, how did you dare to place such a big trade when everyone thought the price would keep rising? He looked at me slowly and said, because I saw they weren't analyzing anymore. They were praying. And that's when he knew the belief had gone too far. And any belief taken too far in one direction will eventually be used by the market to turn against those who hold it. That was the first time I truly understood. The market doesn't need you to be right. It only needs you to stay awake. And if you wake up sooner than the crowd, you don't need to be smarter than them. You just need to outlast them. Up next, I'll share with you 3 signs my mentor used to detect when crowd belief had reached its peak and when it was time to quietly walk away, even while everyone else was screaming hold on tight. If you've ever lost money because you trusted too much, you cannot miss what comes next. My mentor never used formulas, no checklists. He just observed, silently and patiently. And he had 3 signs, 3 signals he always told me to watch for. When all three appeared at the same time, even if the chart hadn't reversed yet, I was already prepared. The first sign. The crowd stops analyzing and starts preaching. He told me when a trader no longer asks questions, but begins declaring it will go up. It must go up. There's no way it can drop. That's no longer thinking. That's hypnotized belief. I once saw a friend live stream for an hour straight, drawing patterns, stretching Fibonacci lines, stacking news events, all just to prove that the price couldn't go down. 2 days later, the market sliced through every one of his patterns. Because the market doesn't listen to you. It doesn't care how much you believe. It only cares how much you have left to lose. The second sign, media begins shouting as if this is their last chance. My mentor never read the news like someone looking for facts. He read it like a psychologist. When a major outlet shouts headlines like price will rise further or get in before it's too late or a new era has begun, that's when he started to see it as the final push to lure in late buyers. He used to say when the taxi driver, the noodle vendor, and the neighbor chat group all start talking about the same stock, the game is about to end. The third sign, the people who should be skeptical begin convincing themselves. Have you ever done this? You buy, and price goes the other way. Instead of cutting your loss, you go online looking for reasons to stay in. Watching more deep analysis videos, hoping someone will say what you already believe is right. My mentor said when someone stops searching for truth and starts searching for agreement, they are no longer trading. They are playing a game called ego. And I know, if you've ever experienced at least one of those signs, then you were like me back then. Smart, but unknowingly swept up by the crowd. I used to think I was sharp enough. After all those losses, after all the times the market slapped me in the face, I believed that just knowing those 3 signs was enough to stay out of the herd. But no, the market doesn't repeat itself. It only mimics your emotions, then strikes right when you think you've figured it out. And the moment you feel wise enough, the crowd reappears in a new costume, a more subtle, more silent, more dangerous version. I've seen the quiet crowd, no boasting, no loud calls. They learned to restrain themselves, learned not to chase tops. They called it progress, but you know what? My mentor said silence doesn't mean awareness. Silence is the moment they're getting ready to believe again. Because the root isn't in how much they talk, it's that the belief still lives on. They're still searching for something to hold onto, something to confirm their identity. When the price rises, they say, "I told you so." When it drops, they say it's just a correction. When they're wrong, they blame the market. But they never ask, what if I'm the one who's out of sync? And in that moment, I began to understand my mentor. He didn't search for perfect entries. He looked for the misalignment between belief and reality. The market, he said, doesn't turn because of news. It doesn't reverse because of indicators. It changes direction when collective belief reaches a point where it simply can't believe anymore. And right after this, I'll tell you how my mentor identified what he called the break, the razor-thin line between reality and illusion. If you can spot it early, you don't need many winning trades. You just need to be on the right side when the whole world begins to lose its way. I once asked him, how do you know when the market is wrong? How do you know when the world is believing in something that isn't real? He didn't answer right away. He just stared out the window and softly said, The break isn't on the chart. It's in the gap between how the market behaves and how people believe it should behave. It sounded vague, but later I understood he always searched for cracks in consistency. When the market reacts less than expected, when amazing news drops and the price barely moves, when the crowd cheers but the big money stays silent, that's when he begins preparing, not rushing in, not guessing tops, just watching like a hawk gliding through fog. When everything seems right but doesn't quite fit. When the crowd's emotion explodes but the market stays still, that's when someone is getting ready to twist the collective belief. My mentor called it the moment when money stays quiet but speaks through its actions. He didn't watch candles. He didn't measure volume. He only needed three things. One, what is the crowd believing? To who benefits if the crowd keeps believing it? 3, does price behavior match the level of expectation? If there's a disconnect, he needed nothing more. He would wait for the first reaction, then strike. I witnessed him short a currency pair when every report showed strength, and the price collapsed within 12 hours. No bad news, no shock event, just one truth slowly coming to light: the crowd believed too soon, too much, and too late to turn back. And I realized the market doesn't offer perfect entries. It only offers the break in belief. The one who spots it first survives. The one who sees it too late becomes liquidity. Right after this, I'll share the trade that changed my life. The first time I applied what my mentor taught, not following indicators, not patterns, just following the silence of money and the noise of the crowd. And for the first time, my hands didn't shake. I remember that night, the US CPI data came in better than expected. So good that everyone expected a breakout, like a beast unleashed. USDJPY had just broken the previous high. Volume ticked up. Market sentiment was electric. Forums flooded with a single message: buy it. What are you waiting for? I looked at the chart. I'll admit, my fingers itched. But then I paused. I scanned the heat map. The breakout volume wasn't convincing. Just a few soft pushes, like someone was baiting in the latecomers. And I heard my mentor's voice: when the whole world believes it can't be wrong, that's when power begins to do the unthinkable. I placed a small short, a probe. No overconfidence, no rush. Just a sense that something wasn't clicking. And if I was wrong, I would take the small loss without hesitation. But if the market confirmed I was right, I would strike with everything I had. I set my stop loss tight right at the spot where, if price reached it, I would know I was truly wrong. No stretching it out, no dodging reality, no illusions. Then I waited. 10 minutes in, price nudged higher. I didn't flinch. I knew the crowd was being fed more belief before the trap shut. 30 minutes later, the first candle flipped. 1 hour later, it broke the old low. I increased my position, no longer probing. I went in like an assassin. No need to second-guess myself anymore. 3 hours later, USDJPY was in freefall. No one understood what was happening. No bad news, no logical reason. Just stunned traders watching their accounts melt before they could react. I held on. I didn't exit, not out of greed, but because every signal aligned. I was on the right side. I only exited when the drop lost momentum and the money flow started to diverge. I caught the full collapse, and it wasn't just profit. It was proof of a principle I've lived by ever since. If I'm wrong, I take a small loss. But if the market proves I'm right, I hit with full force. Because in this game, the difference between a surviving trader and a disappearing one isn't in how many trades they win. It's in knowing when to let go and when to attack like there's no tomorrow. After that trade, I didn't think of myself as a genius. I just knew one thing: I had survived in a market where thousands were drowning in their own beliefs. I no longer needed to be right all the time. I just needed to be on the right side, at the right moment, and stay quiet while the rest of the world screamed. If you've made it this far, I believe you're no longer the same person. You're no longer listening to this video as just content. You're hearing it like something inside you is beginning to shift in how you see the market. And that is exactly what I hoped for. Because what I'm sharing with you isn't a trick. It's not a market hack. It's a survival strategy passed down from a nameless mentor with no fame, but the rare ability to stay alive through decades of account slaughter. Part 1 was the macro gate. Part 2 was the map of collective belief. And Part 3 will be the most critical link of all. It's where everything connects. Where you'll understand why some traders never lose in the moments that matter most. Not because they're smarter, but because they see the market through a structure you've never known. I won't spoil the content, because Part 3 isn't for those who just want to listen casually. It's for those who are truly beginning to break away from the crowd. I'll see you in the next part, where you'll realize if that final link is missing, you'll always trade like you're building a puzzle without its centerpiece.